Stock market did not disappoint, that's for sure. After the Fed meeting, we had the massive sell down. Then you started to see a little bit of rally after hours. But when we opened up the next day, people that bought puts were not happy. We gapped up on the NASDAQ itself about 1.5%. You went home feeling pretty good about your puts, and then you just saw constant buying. Now, the big issue is what is going on in financials? What is Yellen actually saying? Why the mixed message? Was this very simply options that were expiring? So as we look into this, we can see very clearly we had the nice run up all the way until 11 o'clock and then just started selling straight down. And there's a couple reasons for this, and we're going to get into it. Specifically, what is going on with financials? Why this one indicator is giving a signal we should be paying attention to. Now, after yesterday's sell-off, we actually opened up, rallied, got right back to this DTL, and then we rejected it again. Almost to the dollar. Now, obviously, the futures market is higher than this, but if you just look at the SPX, it took you right to that 4,000 level. And I want to focus on this for a moment. Look at this downward trend line. Look at how we're respecting it. Look how we rejected yesterday, and now we have a doji. The good news about today's activity, our dojis are signs of uncertainty. I'll show you a couple things that were somewhat bearish today that do give me a pause, but there are several things that we should be focusing on. To start with, we were not able to hold the opening price. That's a red flag to me and something that I need to pay attention to. But I have this marked off. Now on the SPX, you're really just looking at that 39.12. If you look at the futures market, that's right around that 39.44, 39.50 level. Let's move that a little bit tighter, get that really tight in there. Why is this important? Well, we don't want to be breaking dojis on rising wedges. So we should all be able to see that rising wedge that's in there right now. But let's just draw that in, and we're going to clean the chart up before we do that so we can see it. So if we just very simply connect a line here, and we can see really clearly in there where that trend is, clone the line, and then just drop the line into the top end. Well, that's not going to make me feel warm and fuzzy that I have a DTL up here and that I'm rejecting that DTL not once, twice, but 3 times now. And that's something we have to pay attention to. Now, at the same time we're rejecting that, someone's going to be able to make an argument that this whole thing is really a flagpole and that this is a bearish pendant. So there's some issues here that we're starting to see. I'm starting to see the wicks at the top of the bars. I'm no longer seeing the wicks at the bottom of the bars, and that's become a concern. Now, this is all financial sector related, but there's some things that we need to discuss about that. See these wicks? See how we're not able to break? That's great. But the wicks at the top are not what you want to see, because what that's really telling you is that you don't have buyers. In other words, up here, we ran out of buyers, or if we didn't, we would be higher. So this is a sign of rejection, right? That is projection, or a better way of saying it instead of projection is, think about it as this is the area where the cutoff essentially is, where they do not want to own anything above this. That's the best way to say it. So just to be very clear here. Now, if we dissect this, it does not mean that you're going to automatically take out this low, right? That's not what we're saying. What we're saying is that 3,800 might be on the table again. This is possible to get back down to this level and test. And that's really what we want to pay attention to. Are we going to get back down to this level? Is that in the cards? And the answer is, technically, when you have these kinds of patterns, whether you call it a pendant or bearish pendant, whether you call it a rising wedge that's going to break the doji, if it does, yes, that's what it's telling you. It's telling you that you will get to this level. This is actually, if you take a look at these wedge lines, if you take the lowest point of them, they are usually your targets. So this has the probability to retest 3,800. I think that that would be ugly for other sectors as well besides financials. But we're not really seeing signs of that right now. What we're seeing is that the index in and of itself continues to hold that 200-day moving average, which, considering everything that's going on, is impressive. Now, we went over Powell's speech yesterday, and a lot of people were worried about the bond market, and a lot of people were worried about, quote, being Yellen's comments affecting the market. I think, as I mentioned yesterday, that was just really something that people were looking for. They were looking for an excuse. Bottom line is you had a bunch of people that bought a bunch of options that expired within an hour, and then the panic ensued. You saw that on the gap up. We wouldn't have gapped up today had the reason been Yellen, because she did not make a statement overnight. But the important thing about it is today, I do think that she had an effect on the market, and I think it was bearish, quite frankly. The more she spoke, I think the worse it got, and I'd rather not sugarcoat it. So here we are, and we're watching the TNX, which is the 10-year yield, and we're watching that break that 200 for the first time. Now, what do I mean for the first time? Well, let's just go all the way back and realize that for all of 2022, we were above the 200-day moving average, and now we are getting consecutive closes below that. So there is definitely buying pressure, and they are buying the 10-year. Now, the nice thing is, as yields drop, equities become more attractive. The problem that you're going to run into is if the banks have an issue and they tighten credit, then we're going to have a real problem on our hands. And we're starting to see signs of that, sadly. This is the XLRE. This is the real estate sector. And we're starting to see commercial office buildings starting to have a really bad time. Take a look at Brandywine. You're going to see that this is at pretty much substantial lows. I don't believe we even got here during the pandemic. During the pandemic, we got to a total of 8. We're at 4. So not only is it the location on where these are at, but you have to start looking at what's going on. I mean, Vornado is absolutely huge. If you go out on a weekly chart, these things are falling off a cliff. You're at lows that you haven't seen in about 20 years. Now, that does not make people feel comfortable when they're going out there and buying these kinds of names for yield. They're not going to be able to get the kind of financing they once got because banks are going to get tighter. As banks get tighter, their deals get harder. Commercial properties don't have mortgages like residential properties. They have mortgages for about 5 years. They constantly have to roll them over, and they constantly have to find new projects. Now, if we know this, and we know that they're going to have an issue, then we know that XLRE is probably going to go lower, and we probably know that those REITs are going to continue to drop, and they're probably going to come in. The only thing that is going to change that is when we start seeing something happen with the financial sector. The longer that this goes on, the more concerned that I get, because it should not be going on this long. Let's just adjust that so you can see the numbers down below on the years. You can see the numbers right down here. Now, what this panic and euphoria does, it measures, are we happy? Are we sad? How do we feel about the stock market? So you can see where we're up over these levels and we're cheering. Everything's great. You can see the divergence right here that we're not cheering as much at the same time, and that called the peak, right? You have that divergence right there. And there's divergences, and you just want to pay attention to them. You don't know when that's going to work or when that's not going to work. But it's definitely something that we want to pay attention to, right? We definitely want to focus on that. So we can see the peak right here in November 2021. And we can see how that was actually higher in the panic euphoria phase during February, March 2021. This gives us a slanted declining line at the same time. If you mark these points, you can see that you have an increase. Now, what is that going to do? That's going to give us a divergence. In this case, that is a negative divergence, and it pretty much called the top of the market. So if we look at where we're at right now, can we get anything from this panic euphoria besides this move? Well, there's a couple glaring signals to me. Number one, if we just stay in this range, you have more panic now than you've had pretty much since the pandemic. And then, of course, we didn't know what was going on with the election. And there were some other things here with the vaccines that were getting rolled out. And then there was panic with that as well. But if we draw out and we just take a much longer time frame and we note that this is where we're at right now. And obviously, this level is an area where we have euphoria, and this level is where we have panic, and we're looking at this over a 5-year period. And you can see where we're sitting right now, which is right around one of the levels during the pandemic, right around the election, and that is an issue. But you can see that a valley was not created, or nor are we near anything like a valley right now. And what's troubling me is that the last time that we were even down here, you're looking at this happening in January 2019. So we're not even seeing that level of panic yet. And that is starting to become a concern of mine. Now, we've been talking about the stocks for some time. We're talking about this breakout. We've seen this breakout, and it's pretty substantive, right? So we're coming across here, and we're pushing and we're breaking out. And this is what everybody wants to see, correct? Because this is really good. And I'm obviously happy to see it as well. We finally have a close above the neckline. It has not happened since we broke this level right here. And you can see that level coming straight across, but let's pop it in so that we can all see it. The reason I'm getting so detailed is because of your comments. So any of your comments and how this could be better, just please comment. I do appreciate it. And it is why I create the content. So here we are going straight across. Maybe we're going to form a flag. Maybe we're not. Now, if we just overlay the most basic of indicators, volume by price, this is where I think it gets interesting. So we are above that volume by price if we close here. This is a weekly chart. Now, we are seeing the MACD, and that MACD has been up since January, and it's been pointing higher. So we are up, testing, up, and flipping. And now we even have the histogram stating, wait a minute, these are even widening. This histogram really just measures the width between the signal line and the MACD. And now you're seeing it turn dark green, which means that you have a higher high. And then when it goes light green, it means you have a lower low. Now, if we zoom in on a daily and take a look at this, we can see a couple things. We have the MACD that is still pointing up, which is exactly what we want to see. We can see that we are closing above here, but there's also something else going on. If we drill into this level, and I'm going to leave the right shoulder here, and you can see how we're marked, right? So you can see the levels. If we take a look at what's going on right here, you're seeing the rally tries. This is, again, 2-hour chart. Rally tries, doesn't, rally tries, doesn't, rally tries, doesn't, and then sells back down. So while we're above it and while we're excited, there's a couple things going on here. Number one, you're starting to roll on the MACD a little bit here. You're starting to get tired. You tried to crack it for 2 hours and then you came back. Now you're going to get quicker signals on a 2-hour chart, but we're not getting that massive push through. Now, to be clear, you had above average volume on all my metrics. So all these clouds, my line, everything, I'm above, but I'm not getting that amazing green bar that's just popping through. I'm getting these kind of milquetoast bars. That's not really what you want to see. That's very reminiscent of what's happened back here before. Even when we flipped for a short period of time back in 2022, you can see that we had these long green bars. The ones that failed were like these little dojis. And that's exactly what we're getting up in this range again. And that's becoming a concern. Now, this is a name that you've heard me talk about for some time, and I like playing NVIDIA. It's a very liquid name. I just want to point out what I think is pretty obvious, that if you come here and you look at Wednesday's volume versus Thursday's volume, it's night and day. Well, that's very different than what the stocks was showing. Now, the purpose of me pointing this out is the fact that this was a dragonfly, or was supposed to be a dragonfly, did not make it as one, gave me a reversal gravestone, and now I have another doji. When you start getting multiple dojis all lined up in one area, all different kinds of them, pay attention. It usually means a change in trend. I can give you an example in a moment here, but stay with me because this is all leading someplace. So we have semiconductors. Semiconductors are hot. People like them. No matter which one we look at, we're seeing the same patterns, dojis. They're not able to break out. That's what we have to pay attention to. If I take a look at ASML, which I had a position in yet closed today, and I did okay with it. We did okay with this one in the newsletter. If you don't get the newsletter, link in description. We traded this in the Alpha Chasers community. Got in 631, blew it out right around 659. So I think we were up like $25. And frankly, the reason why I wanted out of this one is because, one, the price. And when this moves and gaps down overnight, because it's actually based NV in Netherlands, when that happens, this could get super ugly, right? You could be dealing with these gaps. I don't want to play that if that's what's going to happen. And there's a chance that we might start seeing weakness, and I'd rather not play with it. And I'd rather just lock it in and let this settle down. Here we are with Apple, and you can see the doji sitting right in here. You have a long-legged doji. Dojis are signs of uncertainty, and we are sitting, what? Right here. So this is something else that I'm watching. We were unable to fill anything in here, and that's a problem. That's a really big problem. There's two more names that I definitely want to go through at the end of this that are not really tied to the indexes themselves, but we're going somewhere with this, and I want to point it out. So here we are with the XLK. And now you can see where the XLK is, and you can see how you're trying to tie in here, and you're unable to get through. Look familiar? Looks exactly like the semiconductor index, right? So this looks like the semiconductor index. this also being the technology looks a lot like Apple. Apple is roughly 7% of the S&P. This is roughly still close to 20% of the S&P. I have to go get the exact statistics of it. And what is driving the NASDAQ right now? Semiconductors. Okay. So now we know all that and we know what the driver is. Now, we all know that this is the real problem that we're running into, the financial sector. We're not getting answers. So why we could attribute Yellen's comments yesterday to it selling down, or whether it's the out of the money options that expire within minutes. To me, as I stated yesterday, it's irrelevant. The bottom line is there's no game plan here for financials. And people are starting to realize that. Okay? People are starting to realize that they don't have a plan. They are not putting a plan together. And that is becoming increasingly concerned. Has me very concerned, because you can't let this stuff stay out there. Because what will happen is the banks are going to start protecting themselves. I'm going to give you an example of this. FRC. We've been talking about them doing a deal for weeks. Now, this is the chart that I think it was Michael Berry that did this, and we popped it up here. This one went under, right? This had the most amount of risk and the highest amount of deposits. This one went under, right? Had not the most amount of risk. All these to the right of it had more risk, but it had the highest amount of deposits over 250K. So you get a run on the bank, and that's what happens. FRC is right next on the list of deposits that are out of control over 250,000, which for some reason now is out of control. So that's how it's being phrased. Now, this is really interesting, because it's not that FRC has more risk than any of these banks. And I want to just make sure that you get this. It's not that they have more risk than any of these banks to the right. All these banks have more risk, all of them, right? And that's the point. All these banks right in here, they all have more risk than FRC. If you are to the right on this chart, you have more risk. Now, why is that significant? Because the problem is deposits. The problem is that your percentage of deposits is high enough that you are scared at around 80% that if there's a run on the bank, that you're not going to be able to meet what you need to meet. That's the issue. It's not so much the debt. You have to understand something about the debt. When you look at what's going on with the debt out there right now, it's pretty clear. You don't have a problem there. The problem is if they come out and pull the deposits, because then you have to realize the losses. For example, if you own bonds right now and you had a bond portfolio, for example, if you were SIVB right now, you probably were not going under, because your bond portfolio was marked here and now you're marked here. And now think about 15% on leverage. All right. And that's what they own, the 10-year. And that's what you've dropped right around from when they have gone under. So they probably would not have gone under if the 10-year was here. But if the 10-year was here and people were still pulling out deposits, then yes, you have a problem. Now, why am I bringing this up? Because on Friday, they were supposed to go out there and say, hey, we're going to do a capital raise. Oh, you are? Okay, that's great. Yeah, we're not really crazy about it because, the stock's at $50, but we should probably raise capital just so everybody's comfortable. Okay, that's great. That's great news. So day goes on, Friday, Monday, come in. This is what you're dealing with, right? Tuesday, Wednesday, Thursday, Friday. You go into Thursday, go into Friday, come into Monday, and what did we do? We lost a bank. Okay, we lost Credit Suisse. At the same time, guess who didn't get financing? They still don't have financing. Nobody wants to finance this company. Nobody wants to buy their debt. So if nobody wants to buy this one, who's going to buy the other one? So when Yellen doesn't give you exact terms on what's going on, and we have a fear index that's not even near where we're at in 2018, which really was, in my opinion, insignificant in comparison to what you're dealing with now, right? And of course, it's very much more insignificant than what you're dealing with in 2009. But where's my panic? And I'm not seeing that. Now, maybe we're not seeing it because maybe we don't need to worry about it, right? Like there is the other side of that. And we've talked about this. Let's look at this chart for a moment, and then I'll bring this home and show you two other names that you need to see. So what I'm getting at is I'm comfortable with the semiconductors, but I'm selling into those rips, right? I bought yesterday. I was pretty clear about that. You can watch yesterday's video. I sold into that today. And I sold into the rallies today because I'm concerned about what I see going on in the XLF, and I'm going to address a couple other names. The bond market, BBB and AAA, corporate bond yields, they're not moving. I'm not at levels, let's bring this down. I'm not at levels that I need to worry about. Here's 2016, not a care in the world. right? I mean, like there's not a care in the world here for what's actually going on. I'm not saying you have to be up here, but to have 100 basis point difference between these two with everything that's going on right now seems like insanity, considering we have preferreds trading at 17% on certain banks. So this kind of stuff is things that do give me pause and make me think, what is really going to fix this? How are they going to fix this? Because you can't just leave this out there. If you leave this out there, what's going to happen is exactly what happened with Credit Suisse. And this is where the problem lies. The problem lies is if you do nothing, eventually partners are going to stop saying, we're not going to trade with you anymore. We don't want to buy your loans anymore. The whole thing will start to tumble upon itself. And they need to fix this and they need to get ahead of this. I personally think they should guarantee deposits. We can all debate that in the comments. Please let me know what you think they should do. I'm really curious about that. Make sure you watch this video at the end. I'm going to link that in a couple of minutes here. I do want to go through two names and what's going on out there. There's two absolute shorts that I think you should look at. But in regards to the financial space, I've been a big proponent of this and buying these and buying the regionals. I have a position in KRE and I'm getting pretty frustrated looking at this and understanding that they have done nothing except tell us that it's going to be okay. And they're not doing anything. Now you're starting to see it wear across the board where even the large banks took out a lower low today. And it is never in history, before I show you these last two, never in history has the market rallied. See where we're at right here? Focus on this level for a second. Has the market rallied? Have we ever had a bull market when financials were cracking? It has never happened. Now you have where we are here in the pandemic, and now you can go all the way back to where we were when we had the great financial crisis. And you remember that we are now currently below that line. And if we close below that, then these lows become in jeopardy. You start cracking those lows, people are just going to get out. Just from a technical standpoint, people are going to get out. So we need a game plan. We needed a game plan 2 weeks ago. We don't have a game plan. You are even losing banks that have hardly any risk at this point. And MTB Bank is a great bank. They were on the sheet that I showed you previously. If you rewind, you'll see that this bank is in the bottom left quartile, which has the lowest percentage of uninsured and the lowest amount of losses. Nobody cares. This has gone from 150 to 112 in 3 days. All right. So this is the kind of panic that we need to avoid. And these banks are going to seize. In other words, they're not going to lend money to the commercial lenders that we just went through. And if they're not going to lend money to them, then Vornado and these kinds of companies, they're toast. And all of a sudden their cost to borrow is going to go up. It's not going to matter which one of these you own. Even this one, Vici, which is a great company. If I was to buy one, it would be this one because you can never duplicate their properties. They're all in Vegas. So, they own pretty much all of Vegas. So you can't really duplicate them, but there's something you need to pay attention to. So you have the real estate component that's going to be a problem. If their costs go up, what are they going to do with their employees at the casinos, right? What is Vornado going to do with their employees? Okay, so this can start to snowball upon itself all because they're not doing something with FRC. And if they did something with FRC, then you wouldn't have this issue. It's the same thing that happened with Lehman. If they did Lehman, you wouldn't have had AIG. Same exact thing. I could do a whole video on it. If you're interested, comment below and maybe I'll do a whole video on it. There was a research report done on Square today. You should spend some time and read it. It was beyond damning. And I'm not a huge fan of Hindenburg research because I'm just not. I'll just leave it at that. But this was a really good report and it was very well done. I would read it if I was you. If you're interested in fundamental and what could really be a problem and how this could really be a problem and how this could unfold, for this to see 50, 51 again, you could absolutely see that. You could definitely see something like that happening. So keep this on your radar. I think it's an excellent short still. And I would really read that report because it's very in-depth. If you look at today's activity, and we just drill into this very quickly, and you can see trading all around. You have the gap down, obviously, and then you have the gap fill, and then you try to rally, fail, tries to rally, fails, over and over again. I don't know how this is going to hold. I don't know how people, if they read that report and you were a shareholder, are going to be overly comfortable holding this. Now, coin, huge buying coming in today. Wells notice still above the 200-day moving average, and we're seeing how this is trading around. Look, this is really very simple. When you have a Wells notice like that and you start reading into what the SEC is doing, where they're saying we're looking for proof of reserves and things along those lines, it is very clear that they're going after this company. Now, how that plays itself out, I have absolutely no idea. A week ago, Coin was saying that they wanted to open up an exchange overseas. They obviously knew this was coming. So the question is, what do you do with this now? Any rally up, my hope would be that it rallies back up to that 76 level. And then I would suggest taking a look at it for a possible short position. This is definitely on my radar for a short. If you are struggling with day trading, make sure you watch this video. I'm getting great reviews on it. It's 10 minutes long, and I think it could actually add a ton of value to your trading and make things very simple for you. The strategy that's implemented in this day trading video is working quite nicely in this kind of choppy market. That's it. Comment on the video. Let me know if you like it. Share it if you think it's valuable. If it's not valuable, don't share it. And have a good evening, everybody.